morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to share with you some of our wave counts. Let's start here with the euro. Actually, I would like to move to the hourly chart. Oh, before we move, let me show you something. I built this trend line by connecting the beginning of the corrective wave with this first retrace to create this area. Then I copy and paste the same line here on the upper side. And when the price is inside the channel, when we build a channel like this one and the price is inside, it's telling that we are likely in a corrective Elliott wave cycle. So now let's move to the hourly chart to start planning the setup. So first of all, we have this liquidity area here, the highs. Imagine all the stops, all the orders that we have above this area, because a lot of traders, institutions, medium, small institutions who went short anywhere, let's say here or here or here or here or here or here, they have or here or here or here, they have the stops above this area, right? Some of them, you know, that greedy is something that most participants have, and being greedy means not booking profits, trying to ride the whole leg, and all those mistakes. So on the other side is the big guy. The big guy is an institution or a set of institutions. So we can say JP Morgan, Citibank, those big banks, big institutions, and we can say that they own the business. They are the dealers. They are the other time frame traders. The name that you like. They make money all the time, right? So we know that roughly 90% of participants in the trading business are losing their money. Retail traders, small institutions. So what the business for the big guy is capturing all the losses from the other participants. Imagine having that type of business where you make the losses from the other side, and the other side is losing 90% of the time. Wow, that's a great business, right? So the way it works is that the big guy withdraws the liquidity. For example, if the big guy wants to see the price moving up, he stops selling. So he doesn't provide supply or short liquidity. So that leaves the market without that pressure on the other side, and the market can move easily. So look, when we check the chart here, we can see with these big candles that the big guy is withdrawing the liquidity, right? Because the price is moving easily in one direction. So the big guy withdraws that liquidity so the price can move up. Look the difference. They are not buying, right? The price is not moving up because the big guy is buying. The price is moving up because they are not selling. And the plan is to get to this area, right? Is to take out all the stops, all the losses that they can here to make that money. Plus, having the price moving above this area is going to trigger a lot of buyers, right? The breakout traders. And then if they restore the supply, if the big guy comes with supply again, restoring supply and maybe withdrawing the demand, the price is going to move to the other side. And now we have a lot of traders trapped, bullish traders trapped in this area, and now we can look for this low here. And the process repeats, right? It can break down or it can reject. So that's the other topic. We need to watch what is going to happen here. Are we going to have a huge green candle that makes a successful auction and crosses this area? Or are we going to start seeing small candles and then some good supply entering the market here with a nice red candle closing under this area and saying, yep, is the plan of the big guy and we are ready to short, right? So reading supply and demand is key to validate, to confirm what we are seeing in the markets. As traders, that's the best edge, that's the best advantage that we can get, is reading supply and demand. And it's actually quite easy, but it requires some repetition and it requires some training. In the Elliott Wave Street membership, we cover daily these markets and we explain daily supply and demand and institutional cycles and accumulation and distribution and tools to help you understanding the wave count and to help you finding the right direction of the market, because that's what we are looking at, edge, right? That's what we are looking, any advantage that we can have in order to make some good money. So that's the plan on the euro. I think we have a clear plan. So first of all, looking for price to move above this area to take out the stops, and from there we can start looking for selling the euro to capture the next cycle down. Let's have a look at the S&P. On the S&P traders, this is the daily chart. On the daily chart, the price was bouncing from the lows, which is extremely bullish. Look, all these stop hunting and then rejection at this area. And here comes the validation. So we have an impulse, an Elliott wave impulse, and then we need to have the corrective wave to validate the validate the leg down, right? So once we have the validation, then we are just going to have the rejection, right? And after having the rejection, we just look for the big wave 3. So if price comes down here slowly, and listen to that word that is important, slowly. You don't want to have huge candles. You don't want to go against supply. So price comes down here slowly, and from there we have rejection, right? And from there we have rejection. Okay, that will be fantastic, right? From there, from this candle, we are going long, and I'm going to build my portfolio here. I'm going long on SPY. I'm going to start accumulating. I'm going to buy some stocks, individual stocks as well, this area. What if, in the other hand, price comes down after be fast crossing this area? Let's say that we have a candle like this one here. Are we going to go long? Of course not. If that happens, we are more likely to take out the previous low. And if we have the rejection there, that's where we can go long. All right. So now let's move to lower time frames. That's the longer term. This is the shorter term. I'm looking for that leg down to test this area to see what's going on here. I hope we have the leg down to have the test, because what if the price departs before? It can happen, of course, but it's not the plan. So I need to have a price crossing down this area. That's going to be key. Having a price crossing nicely down this area. Look how a wave 3 shows up here, right? Wave 1 and 2, and look the behavior of wave 3, strong, right? And then we just follow the leg down, right? And then we just follow the leg down in order to have the completion of the leg, in order to have the leg down, and from there we can just have the rejection or the continuation. We will see, right? So that's the plan on the S&P. If you want to keep following this analysis candle by candle and day by day, because daily I provide a report to my clients, You can visit us on ElliottWaveStreet.com, click on the membership tab, and here you will find all the details about our memberships. We have a special offer of $19 the first month, so you can trial what we have inside. You pick your Forex or the stocks or the full access plan, and you will get immediate access to my charts, to the analysis, to the daily videos, plus education. We have a lot of education inside. And every month I add new education to learn more about Elliott Wave, to help you validate the end of the waves and to have that advantage. And here you can find all the details about the membership. And if you have questions, send me an email at support@elliottwavestreet.com, that is here on top, or contact us through WhatsApp. Here we have a WhatsApp chat on the top of the page that you can contact us, and we are here to help you. Please have a fantastic rest of your day. I'll see you soon. Take care. Bye-bye.